What's our number one business expense? As a small business owner, what is the largest expense you incur? Now, a lot of people are going to say, oh, it's labor, oh, it's cost of goods, and all these other wonderful excuses. But here's what the number one business expense that we incur is: taxes. It's estimated that the amount that we pay in taxes is 42 cents on every dollar that we earn goes out in the form of taxes. That means the amount we pay in taxes on average is greater than the amount we spend on housing, food, clothing combined. Now, as a direct result of this, the average amount of retirement savings for Americans is a little bit less than $50,000. So if you don't have enough money to retire, what's going to happen to you? You're going to keep on working. You're not going to have a retirement. Now, what's an easy way to dramatically lower the amount you have to pay in taxes, cut that biggest expense you have, and yet at the same time help you build up your retirement? It's a personal 401k, And 401ks are absolutely fantastic animals. Number one, they can generate tens of thousands of dollars in tax deductions for you. Potentially, if you were married, husband and wife, they could put away over $80,000 a year within a retirement plan. And then whenever you put that money inside of that 401k plan, now that money is going to be building up in a tax-free environment. If we now use something called the Roth 401k that we're going to be talking about in just a little bit, that money is going to be building up in a completely and totally tax-free environment. And final big benefit of these 401k plans, asset protection. Now, if you get involved in a lawsuit, if it comes down to bankruptcy, the worst case scenario, even though we don't want to think about it, the bankruptcy code says assets you have inside your 401k plan are protected. Chances are most state laws say assets you have inside your retirement plan are exempt from the claims of creditors. So that's the beauty of these personal 401k plans. They can generate very large tax deductions for you. They allow the money to grow in a tax-free environment. And also, now that you're building up this fantastic amount of money, it's protected from the claims of creditors. Now, I know what a lot of you are thinking. A lot of you are thinking, well, gosh, this 401k plan, that's really large, that's hard to operate, only large corporations have that. Absolutely not true. Absolutely not true. Due to recent changes in the tax code that came about in 2002, there is no better tax planning vehicle out there other than the personal 401k. Now let's talk about contribution limits with a 401k. Under these fantastic changes that came about in 2002, you're allowed to put the lesser of 100% of your salary, and you heard me right there, 100% of your salary can go inside a 401k plan up to a maximum of $15,500 if you're under 50 years old, or $20,500 if you're over 50 years old. Also, your company, your business, your own personal business is allowed to put in 25% of your salary for a total contribution of $44,500. Oh, and that's just tax deductions. In some situations, you can actually receive tax credits, and a credit is a dollar-for-dollar reduction in the amount you have to pay for taxes, just for setting up a 401k plan. Let's give an example. Let's say that Frank works during the day at IBM. At nighttime, he has a small home-based business, and he generates, $12,000 a year from that home-based business. Under the personal 401k plan rules, Frank is allowed to contribute every single dime of profit that his business creates into his 401k plan. Because it's under $15,500, he is allowed to put away 100% of his earnings into the 401k plan. He has just wiped income taxes out on the profits generated by his business, and yet at the same time, it's inside his personal retirement plan, building up and accumulating for his retirement, for his future benefit, and building up and accumulating in a tax-free environment. How cool is this? It just doesn't get any better than this. Now, some people say, well, gosh, I can't afford to make these contributions in the 401k. Something might come up. I might need to access that money. I'd rather have it off in savings where I can gain access to the money. Here's another fantastic benefit of these personal 401k plans. You are actually allowed to borrow money out of your personal 401k plan. You're allowed to borrow out the lesser of 50% of your account balance inside the 401k plan, or $50,000. So if you have $100,000 inside the 401k plan and you need some cash for something, guess what? You can borrow out up to $50,000 from the 401k plan. Now, you're going to have to pay it back, and it's going to have to be paid back probably in a 5-year time period with interest. But who are you paying that interest back to? You're paying it back to your own retirement plan. And let's go a little bit further with this. These personal 401k plans, these are not your father's 401k plans. These are self-directed. And what do I mean by self-directed? I mean, number one, if you want to, you can use the 401k plans to invest in the stock market and invest in mutual funds. Alternatively, if you want to, you can use those assets to go out and directly purchase real estate. You can go out and make loans secured by real estate. You can invest in private businesses. There's a whole world of opportunity of what you can invest these 401k assets in, and you are in control. Literally, you are going to have a checkbook that directs how you're going to invest these 401k assets. You don't have to be stuck investing in stocks, bonds, mutual funds. You've got the whole gamut of investments out there that you can use your 401k plan to invest in. And here's another really fantastic feature of these personal 401ks. As of January 1, 2006, there's a new section of the tax code that says you can create something called a designated Roth account within that 401k plan. Now, what that means is, as you put money inside the 401k plan, you don't get a tax deduction whenever you put the money into the Roth side of the 401k plan. As you put that money in there, it goes inside the 401k plan. Now you go out, you make an investment in the designated Roth account of the 401k plan, and as that investment pays off, every single dime is growing completely and totally tax-free. So long as you wait 5 years and you're over 59 and a half whenever you start taking that money out, that money is going to come out completely and totally tax-free. Other super big benefit here. A lot of individuals, they would love to set up Roth accounts, Roth IRAs, if you will. But the tax code says once you make over $160,000 in change, you are not eligible to establish a Roth IRA account. With a Roth 401k, there are absolutely no income limitations. You can make $160 million a year, and you can still make contributions into the designated Roth account of your 401k plan. And let's just walk a quick example through here. Frank goes out and buys some real estate for no money down inside of his Roth 401k. And why do I have in here that he buys that real estate for no money down? First off, a lot of people say, well, gosh, Tim, there's not much I can do with a $10,000, $15,000 contribution into my Roth 401k plan. And I say, au contraire, there's a lot of stuff you can do on a leveraged nature. Also, I emphasize the no money down because with an IRA account, if my IRA borrows money and it makes a profit from that borrowed money, that is something called debt-financed income. And even though my IRA is a tax-exempt entity, it has to pay taxes on the profits generated by borrowed money. So if my IRA goes out and borrows money to buy real estate and it makes a profit on that real estate, my IRA has to pay taxes on that profit generated. With the Roth 401k, what we're talking about here, the personal 401k, that 401k can be completely and totally leveraged. It can be leveraged to the hilt. And now you sell it and make $500,000. Chances are, so long as you wait the 5 years and you're over 59 and a half, whenever you take that money out, you're not going to have to pay a single dime in taxes on the profits generated. Once again, you can do no money down transactions, leverage transactions on real estate. And now whenever you sell off that real estate or your Roth 401k sells off that real estate and makes a nice little profit, all that money is completely and totally tax-free for your 401k and is ultimately going to be tax-free whenever you start taking distributions out of the 401k plan.